Good morning, traders. Scott G with the Simple Trading Life here. This is our regularly scheduled Friday live stream here on YouTube. We'll be going over the market, various trade opportunities, analysis, answering any of your questions. So thankful that you're here. We'll wait for a few more people to join us, and then we'll get started. So I just want to say hello to everybody. Good morning, Sunny. Any comments or questions you have, please type them in the chat. I'll be watching on my phone. And let me get us switched over to screen share. And then we'll get to the markets. So let me bring everybody's comments up. I bring them up on my phone so I can watch them without flipping back and forth on the screens. And let's see here. There we go. I got them up. So I got everybody's comments right there. Sonny, we'll get to Netflix and VIX here shortly. As you can see, as of right now, the market is starting to plunge. We had this little demand zone here. We went up overnight, came back down, tested the demand zone. The first time it touched it, it popped all the way up here. Let's look. That was 23.93.50 up to 24.31.50. So what was that? Almost a $40 bounce right there out of demand, okay, from right here. And then right up here is where we open. I'm going to go ahead and mark that level on our charts. Hang on one second. Let me get to the proper drawing tool. So we opened at 24.20.75. I'll draw this in 24.20.75. For those of you who may be new, what I'm drawing in is the opening price level for regular trading hours. I always mark it the same way with a purple dashed line. You'll see that'll show up on our charts here. That shows us where price opened for this session. And then throughout the morning, throughout the day, you can see does price trade mostly below opening level or mostly above. It also will act as some resistance or support as well. So as you can see, they're still flushing it here. Obviously, we're about 16 minutes into this candle. And everybody's going to get to see me draw the lines in. I'm switching over to ESM from ESH. Okay, just a different month on the E-minis on the S&P 500. Good morning, Justin. I see we just had a bunch of people just join us, so thank you for joining us. We're going to get going here very shortly. And as I said, what I'm going to do is, because I just flipped over to this new month on the ES contracts, everybody will get to see me draw in the lines. So let's just go ahead and do that right now. We always go to our 4-hour chart first. We switch to a line chart. And then we go to current price. And we start working our way backwards, right? So everywhere we have a sharp pivot. Whoops, I didn't have the right tool. Got to have your price line tool. Everywhere we have a sharp pivot or a large move, we want to identify on our chart. Okay, so we'll draw these in. And as long as you're close to start, now see like where it says over here 62, we obviously know it can only move in 25-cent increments, so I will change that to 75. And we just go back and we just mark everywhere that is relevant. Okay, I need to change this one. Make that 25. And on these levels, again, you do not have to be absolutely 100% correct. These are more to give you a guide. Okay, change this one to 50. And good morning, Stacy. Good morning, Derek. Good morning, Al. Welcome to everybody. Drawing some lines in on our new chart here. And I'm not going to draw them all in right now. I'm just trying to give everybody a flavor for how we do this. And again, what I'm doing here is because we know that price only moves in 25-cent increments on ES. That's why I changed those. Okay, current price is at 23.74. Okay. So what I'm doing here is I'm looking for some levels below. 30. Well, let me remove that one, I'm sorry. Okay, current price is at 23.75. So I'm going to come back and I'm going to see if we have anything lower on this chart than 23.75. We might not, or we might. Okay, so there's current price, 23.6750. So we do have a level right here. Let's see if we get anything lower than that. And I'm all the way back, so then I'm going to flip over to a daily chart. See if that'll give us anything else lower. Usually it will. And there we go. Okay, so now we have a few lower zones we can mark here. Excuse me, levels. These are support and resistance levels. So mark a few of these. I'll go back and change them here shortly. Definitely down here. And I would probably mark this right here. Okay, then we go back to the chart we normally trade. For me, that's the 30-minute. We switch back to our candles. And we can zoom back in, and there we have it. Okay, so there's opening price. You can see, obviously I didn't look at anything on here. We just went in, we used the line chart. It puts the lines in where we need them. You can always add or adjust if you need to. Okay, for example, do I need to add a level maybe like right here? I don't think so. I mean, I know this is a big gap right here, but we've also had this wide range of price. So we'll let that play out a little bit more, and then we may add a level later. Okay, so once again, let me stretch this out so everybody can see. Welcome. I see we got some new people joining us. Good morning. Anybody who's new, make sure you give us a thumbs up. Make sure you subscribe to the channel. Click on the notifications bell so you'll be notified anytime we go live or upload new content. So this morning, we had this big climb, right? We had this big rise. So this was 1 a.m., 1:30 a.m., 2 a.m. We had a large candle up. We pulled back, and then we went higher. Okay, strong move out of the zone. That created demand right here. This is demand zone. You can see this morning we dropped right back into it. In the first touch, we already checked. We bounced out of it almost $40. Then we've come back down through, and as you can see, we pierced all the way through it. This will no longer be a demand zone, right? In fact, what I'm going to do right now is I'm going to make sure I take that back like that. Okay, because that shows us it's pierced through. It's no longer a demand zone. All right, even if we're above it, it no longer counts as a demand zone because we've pierced that far through it. But you can see on the very first touch, this candle right here, okay, We bounced out and it was almost $40. We already looked at it. So that would have been a nice scalp for somebody, right? They could have had a nice tight stop, maybe halfway through this zone. And I probably would have looked to exit either up here, like right around this wick, right? Because as you can see, we got up just above it and then pulled back, right? Right here to the 200, maybe even the 200, since it was confluent with that wick. And that would have given you, give me 1 second, 23.93.50. If you would have went to the 200, 24.23, let's just say 50 to make the math easier, 7 and 23, that would have given you $30. $30 on one bounce right there. Okay, these are the kind of trades we look for. Highly probable, highly profitable. All right. Hey, Martin, nice to see you. Okay, so we've got ES on here, and what do we always want to do? This is our range so far, right? We've got less than 6 minutes to go on this candle. I'm going to set some alerts so we can go look at other things. Then that way we will know if price takes out either the top or the bottom of this opening candle, which right now, that's all we're concerned with. That's all we're concerned with right now is if price takes out the top or bottom of this opening range. Okay, so I have the alert set, and we'll come back and obviously look at ES. All right, so Sonny, you want Netflix and VIX. Let's look at Netflix first. Okay, Netflix is a name that we look at quite regularly. All right, so there we are. Okay, Netflix gapped up. Here's where it closed yesterday. Gapped up. And I want to show you a couple of things. So it gapped up, and as you can see, it's been up and it's been down, and it's kind of flat right now. Look what's happening to the 200 SMA and the 20 SMA on Netflix. They're starting to converge, right? Okay, so you notice they've been apart now for a while. The last time they started to converge, we got a big move. It just happened to be a big drop. You don't always know for sure if the move is going to be up or down. Okay, so whenever they start to converge, we start to look for moves. We start to look for moves. Doesn't mean they're going to happen, at this exact instant. I would look for them to get a little bit closer together. That's typically a sign that there's energy building there and that the move is going to happen and it's going to be a bigger move one way or the other. All right. So that's something that we're looking for. Let's see. We know our overall trend is going to be down on Netflix because we look at it a lot. However, look what happened here. Okay. So we've been trending down. And if I scroll in, okay, we sort of bottomed out right here around the 292.93 level. And now we've been working our way back up. Okay, so now we've been working our way back up. That's something to keep in mind. Now if we squeeze in, and we will take a bigger picture look at it here in just a second. If we squeeze in, let's look to the left, right? Okay, so far we couldn't get over this wick. And obviously we haven't been able to get over the 200 yet, so both of those will be important. Then we look over here, we had this big drop away, right? Now, I think I talked about this maybe on the last session, or maybe it was in our premium room. Ideally, I'd like to see this be more of a sharp drop down, then over, then drop, and we would call that a drop base drop. Okay, but so far it is respecting this area right here, and I'm going to draw it in for you just so you can see. All right, so we would have, this is just on a 30-minute chart, we would have some supply, and it would go up to the top of that little wick there. Let me make this pink, and you guys will see how it's respected it so far. It's not my favorite supply zone, just for the reasons I gave you. Okay, I would like to see this be a sharper drop. We just kind of faded down into this. Then we got the sharp drop. Okay, I would like to see it maybe come from up here, drop down, base, and then drop. But if we come back over here, The very first touch, we got in the zone. What did we do? We sold off. Okay, now we're touching it again. And so far it's pulled back. Okay, so we'll keep an eye on that. Oh, and I told you I would look at the bigger picture. Okay, so this is something we do in the Simple Trading Life community. Okay, we're red on the monthly. This is how we get an idea if this is something we want to trade and what type of trades we might want to look for. We're red on the monthly, but forming somewhat of a hammer, right? We came down here, we bounced, we're coming back up. We just had an alert go off. I'll come right back. So let's look at our alert, USDJPY. USDJPY. And this is how we trade. Anybody who's new in here, I see we have a few new people. This is how we trade in here, is when we have alerts go off. Okay, so I had an alert, and let me see. Let me go over here. Check and see. Okay, we are above 110.98. I'm just doing this so I don't have to get off the screen for you guys. All right, so let me get back to a 30-minute. Okay, so the reason that's going off, all right, the reason that's going off is because we're getting up into this supply zone. And look, it's immediately starting to reject. Now, does that mean it's going to fall all the way back down here, or maybe down into this area right now, or maybe even right to here? It doesn't mean it's going to happen right away, but we know the probabilities are on the first test of a supply zone that we're going to get a bounce back down. Okay, so far we are. Let me squeeze it in a little bit. Okay, there's our first test. That's why my alert went off. And see how I have alerts down here? This alert down here will say, if it goes off, it'll say look to go long. Now, will I immediately do it? No, I want to make sure you bounce first. All right, now right now we are bouncing. If you take this trade here, if we would have took it right there, I would personally probably set my stop either right at the very top of the zone or about 50% of the zone. Okay, so we'll come back to this, but for those of you who are new, that's when you hear these alerts go off, we'll go and look at them. When we know that a trade is developing, okay, and what we mean by developing, we know where our zones are, where this is a supply zone, this is a demand zone. We know what's likely to happen, right? So the first touch, that means this zone is fresh until it's been touched. The first time it gets touched, it's likely to bounce lower. And how do we know that? We know that there's aggressive sellers up in here. That's what created this zone. So we were on an uptrend. We got here. So this is a rally base drop. Those form some of the strongest supply zones. This zone is considered fresh until it's been touched. Then it's considered used. All right, so I hope that makes sense to everybody. And we'll come back and look at this, but let's go back to Netflix. So we'll finish on Netflix. So we were looking at the monthly, now let's look at the weekly. We know that the monthly is red, but it was forming a hammer. Okay, here's the weekly, big green on the weekly. Right, and as you can see right up here with supply. And now we'll go to the daily. And when we go to the daily, you're primarily looking at what did it do yesterday. Okay, so here's today. Yesterday, look what it did. Went up, first touch of supply, sold off. You guys see how this happens over and over and over again. Okay, so we're green here, but we're forming somewhat of a shooting star, but then today we gapped up because of the market, right? Because of the market, and again, we're right there by this supply area, and so far, if I go in back to the 30-minute, okay, let's squeeze it back in. Okay, so far it's rejecting again. It's rejecting again. Okay, so that's Netflix. And then what was your other one? VIX. Okay, you want to look at VIX. Everybody's excited with VIX when there is volatility. Okay, so we'll draw some lines in. Obviously, you can see VIX has been selling off, right? High of 85.47. So the first thing we do is we draw our lines in. Okay, VIX is rarely this high, right? You know you're in extreme volatility when VIX is like over 30, let alone getting up to like 80. So we're going to put our lines in. All right, I would go right here because it's most recent. Put that in, and then we start working our way back down. Big moves, sharp pivots, and you're concerned with most recent price action primarily because it's going to have the most relevance on what occurs. All right, I would put one right here. If I can get my line to move, there we go. Let's keep moving back. I would put one right there. And when you draw in your support and resistance lines, you do not have to be perfect. I want everybody to know that. You do not have to be perfect. Close enough is good enough. All right, I'm going to come over here. And maybe one more for now. And draw that in. Switch back to our, whoop, I didn't put it in. Switch back to our candles. Switch back to the 30-minute. And now we can come over here. All right. Okay, so what do we see immediately on the VIX? What did we do? Put in a double top, right? Okay, right up here around this resistance level. Price bounced, came all the way up here. Okay, so we came down. We hit this support level at 57.21. We bounced up. We got up to this resistance level. We sold off. We bounced up. And now we've been selling off. Okay? So we got a double top right there on the VIX. And it's moving back down. Now, those of you who don't know the VIX, don't trade the VIX, I trade it maybe 2 or 3 times in a year. I just don't trade VIX that often. A pullback on the VIX will be highly likely if volatility in the market starts to subside. That's what this is a volatility index, right? So when volatility is high, that's what causes, let's go back to the 4-hour. That's what causes this. See this huge spike? Okay, look how the VIX normally trades. All right, and you can see I already had a trend line in there. Okay, see my trend line? This is how VIX normally trades, and then the market correction happens, and we get this extreme volatility, right? So, for those of you who like to trade the VIX, as volatility subsides, right, you're going to have a huge move back down to the downside. Okay, so I know some people have been buying VIX puts, out a couple of months, trying to catch the fall back down, because it will happen almost as quickly as it rose. And then it'll get back down here into this normal trading range. Okay, so like I said, okay, very rarely does it ever even get over 30. Okay, look at this. So just on the 4-hour chart, okay, here's the only time it was ever over 30, let alone all the way up here into the 80s. Okay, so I hope that makes sense, and hopefully Sunny, let me get off of here for a second. Okay, Sunny, you can kind of see on the 4-hour what's been happening, right? It's even breaking through the 20 SMA right now. So I hope, Sunny, that gives you the info that you need there on the VIX. Let's go back and look at the market. Excuse me. Okay, 4-hour view. If I squeeze it in. Okay, 4-hour view, you can see we've steadily been falling. Now we're trying to get back up here, right? So we need up here really kind of above 2501 in that area. We need to reclaim that, hold that, and keep making higher highs and higher lows to determine that this may be, and I'm not there yet, that this may be a point that the market starts to get some footing. Okay, and I am not there yet. You can see we're already starting to sell back down. See these two candles here, but I want to show you something. Right, so if I take a trend line, I want to show you how you can't get too overexcited. All right, so if I would have took a trend line right through there, when we got above there, people would have been like, okay, all right, bottom's in, we're turning around, we're good. Okay, but what happened? Came up here, double top, kept moving down. All right, so let's draw a trend line here. All right, same thing. Once we broke above this trend line here, actually, let me move that. Give me a second. Activate. Here we go. So let's even say it was like that. All right, once we broke above there, again, people would have been saying, look, bottom's in right here. We broke above, we retested it, we even tried to go higher, we rejected the 20. Wow, big sell-off again, right? Okay, and you just keep doing this over and over and see, okay, and you can see there's another trend line, right? We broke above it, we retested, we started to go higher. Everybody's like, hey, the bottom is in, and what did we do? We sold off again, right? So now you could draw a trend line from here down through here. Okay, we've broke above, we've coming back now. We're going to probably retest it, or we're going to break below, but we may even retest it like we did up here. Okay, we broke through, retested, went higher, came down, double topped, and then sold off. Okay, we could do that again over here. So all I'm saying is we can't get excited until we break above this about 2,500 area, break above it, hold it, which means we may go up, pull back to it, go higher, pull back, go higher. As long as we're putting in higher highs and higher lows, then we can start saying, all right, now it looks like we may be turning things around. As I said in our room yesterday, I would even be I don't care which direction the market goes, because I trade it both ways and I trade everything both ways. I wouldn't even care if we just ranged sideways for a while. That would make investors feel better. It would decrease the volatility, and it would bring both players, meaning bulls and bears, into the game. Right? Okay, bulls have been getting slaughtered all the way down through here. Just crushed. Every time they think it's going their way, they get devastated. All right? I would much rather see the market at least go sideways for a while, or that we do put in some sort of move to the upside. Okay? Maybe we only get up in here, right? Maybe we only get up in here and then it starts to turn back down. But at least it brings both sides into the game. And that's kind of what you want. Okay, you're welcome, Sonny. I just saw your comment there. All right, so if we go back, since our alerts haven't went off, we know that there's probably not much going on with price action, right? And there's not. We've got an inside candle here. We've got about, what do we got, about 17 minutes to go, 16 and a half minutes to go. So here was our opening range. There's our opening range. And again, let me draw in where we opened, which was 24.2075. I don't know why that disappeared. We drew it in once. 24.2075 is where we opened. Okay, get this put in. Dashed line, purple. That's just what I do. I mean, you do anything you want. You don't even have to have it if you don't want. Okay, so that's where we're at. And I already showed you. Again, I don't know why all this stuff disappeared. And that's what frustrates me about Thinkorswim. I don't trade off of Thinkorswim anymore. I'm just sick and tired of all the stuff that's been happening. Okay. Remember, we already had all this stuff drawn in. All right, so there was where we came down into demand. We bounced. Now we've come through. We've bounced up again. Okay, and right now we're just an inside candle, and all that means is we haven't taken out the top or the bottom of the candle preceding it. Okay, it's important to know from a price action standpoint when you take either this out or this out, and then you would start looking to the left to see what price is likely to do. Now, I'm just giving you a scenario. I'm not saying it's going to go down. Doesn't matter. If it goes up, we'll talk about that. But if it goes down, and we would take out the bottom of this wick here, okay, you see this pattern there? Okay, that could accelerate price to the downside, especially if this trend line wouldn't hold. All right, this trend line has been respected for a long time now. Those of you who've been watching the live streams, those of you in my room, you know that. That's why I haven't removed it. Even when we go above it, we tend to come back to it. You see, we almost came back to it here. Here, we broke above it, we came back, we went below, we've broke above, you know, it looks like we've been coming back. All right, but if we break below this wick, got this nice diagonal action here with these small to medium-sized wicks. Small to medium-sized wicks will actually help price accelerate. If you get big bottoming tails like this here, like this over here, it tends to stop price. It acts as support. When you have these smaller to medium-sized wicks lined up in a nice diagonal fashion that works up or it works down, if we would take out the bottom here, you can see then the next thing we would take this out, that could pop us down here. If we take this out, it could pop us down here, and so on and so forth. And that's how you accelerate and you get big wide-ranging candles or big moves. All right. Okay, so we've got our alert set. So we're going to kind of watch that. All right, see, we got a couple more people with us. Welcome, everybody. Let's just go through and look at some different names. All right, here is Apple. 30-minute. Okay, we're just ranging sideways. Just ranging sideways. We did gap up. We went up. We came back down. Trying to go higher. This is the high on the day so far. If I squeeze it in a little bit more. All right, we got some demand underneath. If it would happen to reverse down into this, we'd be likely to see a bounce, right? We know there's aggressive buyers by the way it left this level. So we came down, we based, okay, drop, base, rallied out of there strongly. Okay, so we know there's some aggressive buyers here. If it would happen to come back down here, it would most likely look to bounce. Okay, we don't know exactly where it would bounce to. There are ways you can sort of, obviously you can look for the next area of resistance. You can look for the next area of supply. But what we do in the Simple Trading Life community is primarily, especially in this high volatility environment, primarily we are looking for scalps and day trades or short-term swings, which means 1 to 3 days, because it is hard to swing trade in a high volatility environment. I've seen so many people on Twitter, lots of people that I know personally, they'll say something like, let's just say price action was positive on SPY or on ES or on SPX. Well, they'll buy a bunch of SPY calls going into the close, and they'll say, oh man, I bought, let's say it was Wednesday, I'm just making this up. I bought Friday SPY calls, man. I think we finally hit bottom. We're going to turn around. These things are going to pay off. And then what happens overnight? The market fades and they get crushed on those SPY calls. Same thing on equities here. You could buy something thinking, that it's turning around. I've heard many. Okay, this was an artificial ramp into close. If you guys remember, that was the day that Trump had the original press conference where he had all the health officials and all the CEOs of the different companies that were helping, and that was right into close. The press conference, if I remember right, it started at either 3:15 or 3:30, and everybody there was like, okay, we're on this. We're going to take care of the coronavirus, and I know tons of people that were buying calls because of this. Look what's happened since, right? First of all, we gapped way down the next day. We made a little jump up, sold off again. Little jump up, sold off again, right? So all those people that bought calls over here thinking, okay, we're finally turning this around, they got crushed, right? So that's why swing trading right now is very difficult, not highly advised. Let's look at AMD. Okay, here's where we're at on AMD. Came down, look at this, right to our support level. Dropped, caught a bounce off of support. We're working our way back up. This level here has been respected, as you can see. Okay, we're working our way back up that way. We have some supply up here. I have an alert. I do trade AMD every now and again. I have an alert set. If we make it all the way up here, we're likely to at least bounce. Okay, I'll know when it gets up there. When the alert goes off, I'll immediately look for a downside target. And by then, we'll have all this price action to know where is the next likely place. Is it a big bottoming tail, near the bottom of that? Is it a resistance level? Is it a support zone? Excuse me, a demand zone? Well, I'll know that once we get up here because I'll have all this price action to gauge. Recent price action is the best thing you can look at. All right, let's look at Amazon. And for those of you who like to trade Forex, we're going to be getting to some Forex names here in just a minute. Okay, here we are on Amazon. Okay, now look what Amazon did here. Okay, they got up to this supply. Here was the first touch. It bounced down. We looked at this the other day. Then it tried to break above. It couldn't. Came back down, sold off again. Came up, sold off again. You see this choppiness here, but this is no longer a supply zone. Okay, even though you've seen it sort of respecting it, once it was touched this first time, okay, I cut it off. This used to go all the way across, and then I cut it off. And then the reason I leave it on there is you kind of know, you can see what price has done in the past. Right? Then we finally went higher, got up here to this level, broke through, retested, went higher. Okay, actually we came down, then we went higher. All right, so that's where we're at on Amazon right now. And let me see here. Just taking a couple looks at some things. All right, let's look at a couple of Forex names. All right, this is one I traded last night. Okay. This is one I traded last night, and I was so tired, I haven't even had a chance to, I'll do it right now. Need to bring this back. Okay, needs to really come all the way back to like right there. All right, so last night, and I don't even remember what time, it was starting to get late. We had alerts start to go off. Okay, came up here, tested, sold off. And I sold right in here. It was like right in the middle of this wick. All right, got a nice bounce down out of here. I collected, I'm going off memory, I'd have to look in the room, but I think it was 70 pips on this one. Okay, but you see how it works, right? Came down, comes back in. Here's your first penetration into the zone, sells back off. I didn't get all of this. And in fact, I thought it was probably going to continue lower, but you don't know for sure. That's why, the way I trade, I'm looking for scalps and day trades. 70 pips on one move that lasted less than an hour, that's pretty phenomenal, okay? That's a scalp trade, really. 70 pips is pretty phenomenal. But I kind of had this area right in here as a target. Why? Because we had the big move up. This is not really a base, but you can see things kind of slowed down in here. Then it ramped back up. So I kind of had this area as a target. And when we came down through, I was still in the trade when it was down in here. But then as it started to come back up, when it got about halfway up in here, that's where I sold. I think I sold right around the bottom of this wick. Okay, so from up in here to down there, I was able to get 70 pips. All right, here's another one. I want you to see how similar these two moved. Okay, so the last one was the Aussie CAD. This is the Aussie Swissy, or Aussie Swiss. All right, same thing. We came up. This was the first penetration in. All right, I didn't make as much on this one, but it was still a nice trade, right? The chart is a little bit deceiving. These are big moves. Okay, so I actually entered right here. Okay, right there. And then it still penetrated further. Then it sold out of there. I sold right here at the 200. Why? Because it's a likely place for a bounce. And what did it do? It bounced. Now, I said in the room, you know, hey, it's likely that it may come right on back down here to demand. But I sold right here because it was the highest probability play. And I made, I think it was 44 pips. Because remember, I entered right here, right on this first touch. That's where I entered. So I didn't capture all of that. If I would have captured all of this, give me 1 second, 579 down to 570.09. Okay, that would have been 70 pips. But I entered right here because it started to sell off. Okay, then it went a little bit higher. Then it sold off. It pulled back right here to the 200. I got out here to 200 and got 44 pips. Okay, again, for a scalp, 44 pips is phenomenal. You take that all day long. If if I wasn't on with you guys, right now in this environment, I would probably just scalp Forex all day long, like all day and all night, because it trades 24 hours a day. That's what I would probably be doing if I wasn't on with you right now. Okay, I have different alerts set. You see this alert right here. Okay, so when price gets back down here, this alert will go off and it will say, look to go long. It'll say, look to go long. So when this goes off, I'll watch, and if it looks like it's starting to bounce, see, it did start to bounce on this first touch right here. That's why I entered right there. Somebody might say, well, why didn't you wait till it got up in here? Okay, well, let me do this. I want to make this as real as possible for everybody so you can see what happens in real time. Let me stretch it out so you can see better. All right, whoops. Okay, there we go. There is all I could see at that time, right? You don't know any of this other stuff. You guys are looking at it in hindsight right now. So then it's very easy, right? Even for me, in hindsight, you can say, well, hey, why didn't you wait until it got up here? You had a resistance level up here. Isn't it likely to make it up to the resistance level? Not necessarily. Okay? The folks in my room in the SimpleTradingLife.com community, they know, because they've seen it happen, a lot of times the first time you barely touch supply, it takes a big bounce down. All right, so here we were. This is all I could see at that time. We touched and we started to pull back. Right? So I entered immediately. I'm like, I got to get in this. All right, then what happened? Then there's the next candle. So now do you freak out? No, right? Because this is a big zone. This is a big zone, right? Price can turn anywhere in here. This zone is showing you, and you see why it's drawn all the way up here? Because of this big topping tail. This big topping tail shows a lot of selling pressure. So at one time, this was a great big green candle. So was this one, okay? These were big green candles at one time, and then they got pushed back down because of selling pressure. Then we get the big sell-off. Okay, so that's what created the supply zone. So I didn't freak out, even though I entered here, I didn't freak out when this happened. Okay, then here's the next candle. It even poked a little bit higher, then it started to sell off. Okay, then we came down, and when we got to the 200, I said, you know what? That's good enough for me. It was late. I think it was 11, midnight. Well, I can tell you. Hang on. 11 o'clock. Yeah, so it was between 11 and 11:30. I was tired. I was ready for bed. I thought maybe it would continue to drop. Maybe it was going to bounce here and then break through. But when it got down here, just get out for me. Okay? Now, again, hindsight being 2020, I thought it would probably continue on down, and what happened? Bounce. Okay, and then here's where we're at now. Okay, we went higher all the way to the top of the zone. Okay, so obviously no longer fresh. I'm going to modify this here in a second. And we've been selling back down. So now I'm just waiting for it to get down here. My alert will go off and I'll look to go long. It's that simple. It's not difficult. You just take these trades over and over and over and over again, and the probabilities are on your side. Are they going to work out every single time? No. But if they work out a high number of the time, which they do, and you're making good profit each time you take a trade in comparison to what you might lose if you get stopped out, then you're going to make a lot of money. All right, let me squeeze this in. Okay, because what I got to do now is I have to adjust, because this is no longer fresh, right? So now I bring this back in, and really it needs to be brought into like right there. Get it back to where it goes. Okay, and then I leave it there because it shows me what happened, right? It shows me that it worked just like it should, right? Now, the best trades, and they don't happen all the time, but I did have one like this last week. The best trades are like it bounces here and then immediately goes right down to the next demand zone. All right, that would have been 57.64 to 56. That would have been over 100 pips. Okay, from the bottom of this to the top of this. See, 57.64 to 56.58. So that would have been over 100 pips. Those are the best trades. And they do happen, okay? They happen more than you think. I had a trade last week. Again, the people in my community know I had a trade last week. I had a 173 pip trade, one trade, 1 day trade. I'm going off memory right now. It was either 2.5 or 3 hours that it took to play out. That's phenomenal. Infamous, no. I Forex trade on Forex.com. Currently, Tasty does not offer Forex. They have equities, they have options, and they have futures. So that's what you can trade on Tasty. Okay, and that's the platform I use for everything else. And then I use Forex.com for my Forex trading. And I like it. I switched. I was using Thinkorswim. I hated the issues I was having, and they're a little cumbersome when it comes to Forex, in my opinion. And they make it harder to move your money. You have to have, you could have a big chunk of money in your main trading account, and they make you move part of it over to Forex. Okay, where a lot of Forex places, if you have other things that you're trading, it's all coming from your same pool of money, so to speak. But I mean, that's not a huge deal, but it's just, again, it's cumbersome when you want to take money out of Forex on Thinkorswim. It takes 2 or 3 days for them to get your money and get it to you, where most of these other places it's almost instantaneous. Okay, but I don't want to just sit here and rail on Thinkorswim, because I still use it for their charting. I love their charting, right? Okay, so let's go back. Let's look at the market. We know our alerts haven't went off. Okay, we know. Let me do this for a second. Okay, we know but we're getting close. Look, okay. So price came back down to where this demand was. Now we know this isn't fresh anymore because we broke all. If you pierce that far through it, this is no longer in effect. Okay, just because it decided to turn right here, that's not because it was fresh. Okay, this was the bounce when it was fresh. Okay, so we're moving our way back up. We're back above our opening price level. If we take this out, then we have the 20 to deal with, because we always look to the left. Then we have the 20, and then we have this candle with this wick up here. Okay, if we get above there, we could very easily move back up to here. Let me draw this in. Okay, and we could have some supply waiting right up here. I'll draw this in for you. Bring it across. Make it pink. And for those of you who aren't on here all the time, pink is my supply zones, green is my demand zones. Yeah, Justin, I'll look at the cable here in just 1 second. Absolutely. Absolutely. I trade that quite frequently. Okay, let's go down and take a look at it because it will be on my watch list over here. There it is. Okay, so here's the cable. It's the pound dollar. It's just a nickname for those of you who don't trade Forex. It's just a nickname that they give to it. And I need to pull my zone over in case we get up there, right? All right. Okay, so here is the 30-minute look. Here's where we created supply, right here. And that's from a drop, base, drop. And it's a big drop, really. I mean, even though you got some of the small green stuff in here, okay, that was an aggressive candle. And then a couple more medium-sized candles. Then we based, and then we get this big drop away. Okay, so this should be a strong supply area. And then we moved away quite a distance. For people who are purely supply and demand traders, they also look at zones, the strength of a zone, by how far away price moved from it before it comes back to it. All right. So again, now we've broken, we've retested, and then it's probably going to try to go higher here. Okay, you see that? See that here? Excuse me, right here. It's 200. We broke, we came back to retest it, and now it's inching back higher. So we're not that far away. We're not that far away. If an alert goes off, you can look to go short. If I squeeze this in, okay, if we get up here, and we just happen to have a resistance level within the supply zone, that's always nice, right? That's always nice. Okay, so this is what they call the cable. It's the pound dollar. And they call it the cable because back in the olden days, how did Great Britain communicate with the United States? They ran a cable through the Atlantic Ocean from Great Britain to the United States. So they call it the cable, right? Pound dollar, that's just the nickname for it. All right, so here's a little bit closer look of this supply zone up here. All right. So you see this is what I like to see more than if it would have been all small candles down here. Okay, we came from up here, big drop, we based. These 3 candles right here are your base, and then we dropped away big time. So that tells us there was a lot of aggressive sellers in here. Many more sell orders in this zone than buy orders. I know most of you have been with me long enough to know that does not mean there's more sellers. There's more sell orders and there's more aggressive sellers. And why? Why do we know that there's not necessarily more? Because every transaction to come down here takes a seller and a buyer. All right, so it's just a little bit incorrect to always, I hear a lot of people when they talk about supply and demand, they'll say, oh, well, there's just so many more sellers. There's more orders. There's more sell orders up here, unfulfilled. But to get this move, there had to be buyers too, because you have a seller and you have a buyer. All right, just little things. I mean, I just want you guys to like kind of think through things. All right, it's just that they're aggressive and there's more unfulfilled orders up here, and that's what drives price down. There still has to be buyers to buy them, right? Seller has to sell them to somebody. Okay, so that's the cable. Let's look at GDX. I traded GDX the other day, made a nice little profit. I made 34% on my money, which is not bad. Okay, that wasn't risk. That wasn't like 3 to 1. I made 34% on the money that it took to make the trade. All right, so this is what I showed everybody the other day. Okay, somebody asked me what my reasoning was to go short on GDX the other day. I had 2 reasons. Number one, we had just double topped right here. Okay, that's why I have that line there. We came up, came back here to this support level, came back up, and when we double topped right there, okay, that was my first signal. And then the second thing is the overall market was weak. Traditionally, we talk about this every time, traditionally, gold is strong when the market is weak, but it has not been the case on this market correction. Gold has also been weak. So when the market was weak and we had this double top, it was a little bit of a speculation play because I entered before the close. Had to have been here, I guess. Must have been right there. And then I sold it the next day when we sold down. Okay, all right, so we just had an alert go off on the market, on ES. So we're going to come back over. Okay, so we just took out the top of our opening candle. See that? We just took out the top. Now we do have the 20 right here. We got to get over the 20. Then if we get over the 20, we have to get over this wick. And if we could get over that wick, we pretty easily should be able to make it up to supply. Now, that's a lot of ifs, right? That's a lot of ifs. So far, it's struggling getting over the top of this wick. Just barely got up there, and then it pushed back down. See that? We're watching it in real time. Okay, got right up to the top of this wick, and now it's pushing it back down. So that's why I said this is the first one. I call them obstacles. Okay, the first obstacle, you got to get over this. Second obstacle, you got to get over this. Third obstacle, you got to get over this. You see how it's not as smooth to the upside as it was when I showed you what the downside looked like? Okay, here's the downside. If we would have took this out to the downside, this actually sets up to accelerate price to the downside. This is a little bit more difficult. Not impossible. I mean, obviously, if buyers want to drive this up, unless there's just many more aggressive sellers up here, they might be able to push through all this. It's just not as smooth. It's a little bit more difficult to get over this. I mean, look, so far, look at this rejection, right? Look at that rejection. And then you have this that would more than likely act as some resistance. Then you would have this wick. All right. Al, I'm not really interested in it right now for the reasons you're asking. Would I have entered if it breaks and holds above here? I personally wouldn't. You guys know me, the ones that have been, if you're either in my room or you've been on several of these live streams, I'm very conservative. I'm very conservative, which is a big, big change for me. Years and years ago, I was a super aggressive trader. And being super aggressive meant I would have big, big gains and big, big losses. And then you ride that emotional roller coaster. Anybody who's read trading in the zone. He talks about that. There's some traders, and they're never successful. But there's some traders that's almost like a high for them. You know, the big ups and the big downs. You know, they're euphoric when they go up and they're devastated when it goes down, and it just happens over and over. That just wears you out. And in the end, you typically don't make money. You know, I've told the story. I don't know if I've told it on the YouTube live stream, but I know I've told it in the room before. And when I say the room, I'm talking about simpletradinglife.com, folks. If you want to join us, we have both a free chat room and a premium room. So you can go to simpletradinglife.com. It's scrolling across the bottom of the screen, and you can check us out and you could join. But anyway, the story, back when I used to trade that way, one of the best weeks I had ever had, you know, I made like I think it was almost $14,000, and then literally like just gave it back in a matter of 2-3 days. Okay, because that's back when I was trading very aggressively. So I would make money very quickly and then lose it even faster. Okay, and you're just sick to your stomach when stuff like that happens. Okay, you know, you make almost 14 grand in about a week. Actually, it was about 6 or 7 days. You know, it made about 14 grand in profit, and it only took about 3 days to lose all of it that quickly. And back then, also, you know, I don't trade with emotion anymore. I let my process and my rules dictate what I'm going to do. But also back then, when I say I was aggressive, I also had that emotional mindset of it's going to go a little bit higher. Just wait. It's going to go a little bit higher. And so there'd be many times, I know I've, again, not in here, but I know I've told this to the room before. I had one trade one time where I made like $3,800 on one trade, and that sounds like a great trade. Okay. But I was like emotionally devastated because at one time I was up 6,600 on the same trade, and I kept saying, oh, it's going to go higher. It's going to go higher. And then it started to pull back a little bit, and I didn't get out because I thought it would go higher. And it started to pull back a little bit more, and it started to pull back a little bit more. And eventually I got out, but I could have made almost twice as much. Right? That's the wrong mentality to have. Okay, infamous. I get it. I feel for you, right? And all you got to do is start to change that mindset. I say you got to deconstruct your trading psychology and then reconstruct it in the proper way, because it comes down to psychology. That's what that problem is. Has nothing to do with your strategy, really. Now, can you have better strategies than others? Sure. Okay, but a lot of people make money trading many different strategies. And I'm not the kind of guy that says you have to trade one way. That's not me. I know guys who trade only Fibonacci and make money. I know guys who only trade supply and demand and make money. And I do like supply and demand, obviously. I know people that trade buy the close, sell the open, like primarily, meaning they buy every day they're looking to buy some names right before close, and they're guessing on which direction the market's going to go overnight, and then they're looking to sell the next morning. I know people that use nothing but indicators. They use RSI and MACD and oscillators and this and that, and they make it work for them. Okay, now I don't believe in indicators. I think they give way too many false signals. But I've been there. Infamous. So, yep, Derek, Trading in the Zone is an awesome book. It's #1 on our recommended reading list in the Simple Trading Life community. We have a recommended reading list. That's the #1 book. And you should read it more than one time a year. You should read it 2 or 3 times a year. Just reread it over and over and over again and get that ingrained in your head. Trading for a Living by Dr. Alexander Elder is another great book to read. That's #2 on our list. So those 2 good books for you. Okay, so you can see, we're going to start looking at some other stuff here again. You can see, again, it got up here, pushed it down, Okay, it's even below opening price level, and it's just sort of hanging out right now. Okay, so what we're going to do is we're going to set an alert up here again. And if it gets back up there, because we already have an alert to the bottom. Okay, now if it gets back up here again and clears this wick again, we'll know. And then we'll see, can it clear the 20, and so on and so forth. All right, but you can see the struggle. You can see the struggle. That's why I said a little bit more difficult to the upside than it would have been to the downside. This action right here really would set up. If it came down through here and got into this, you could really see some action to the downside. Okay, not that we want that. I mean, not that we want that. If you're a bear, you do, right? Okay, bulls want to see it get back up here and even eventually get above this supply area. Okay, welcome. I see we have some new folks in the room. Hello. Please give us a thumbs up. Make sure you subscribe to the channel and click on the notifications bell, and you'll be notified whenever we go live. Let's look at some other things. I tell you what, let's do this. Let's go back. All right, so there was the bounce. Okay, remember we had this alert go off way back at the beginning of our session. Okay, this is how it typically works. Right, you get that initial first test and you get the strong move away. So let's look and see what was this. All right, the bottom of this zone was 110.997, and this got as low as 110.942, right? Okay, so I just got to do my math here. 997, 942, 55 pips, right? I think I'm doing the math correctly in my head. Okay, so these are the trades that you look for, right? Now, will it continue on down? It might. It might. Okay, but I'm mostly scalping and day trading. I would, if I was in this trade, I would have probably looked right here, and if we broke below and continued to go lower, or broke below and just retested this level and continued to go lower, I would stay in. Last week when I got that one trade for 173 pips, that's what happened. I had alerts set at the various support levels, and when it would break through, my alert would go off and my alert would say, watch price action. So that tells me, okay, stay in it, and it was breaking through, it would come back and retest the bottom of the level and continue lower. So I would stay in. It'd get to the next level, it would break through, it would come back, retest, and it would keep going lower. And I stayed into it all the way for 173 pips, and it was like a 2.5 hour, 3 hour trade, and I was ecstatic, right? I was absolutely ecstatic. But this is more typical. But you can see, you guys, you see this in real time. See how probable these are, okay? 50 pips, what does that mean financially? It depends on what you're playing. So a standard contract typically it's going to be somewhere around 9, 10, I think some might go as high as $12 a pip, but generally around that 9 to 10 range. There might be a couple that are as low as around $7 per pip for a standard contract. What will a standard contract cost you? Every currency pair is a little bit different. So somebody had asked me in the room last night, and I gave them some examples. I gave them some. This was in a DM message, a direct message. Some of them were, cost you $4,300 for one standard lot, okay, and that was getting you $9 per pip. Whereas a couple of other currency pairs only cost you around $1,600 to $1,700 for a standard lot, and you were getting $10 per pip. All right. Now, a professional Forex trader, they could care less, right? They're trading whatever the best trade is, But just giving you some idea financially, there was another one that we stumbled across. I was just going through various pairs, picking them out, and looking up what the lot cost, a standard lot, compared to what you could get per pip. We did find one that it cost you like $4,300, and you were only getting $7 a pip. Okay, so some people might not trade those. Some people, they might just say, hey, that's not for me. Now, you don't have to trade standard lots. That's the great thing about Forex. You can trade a mini lot. So a mini lot, instead of $10 per pip, you're going to get $1 per pip, okay? Because your cost to enter is that much lower, right? It's 90% lower, your cost to enter a mini lot. And then some brokers also offer micro lots, okay, which would only be like 10 cents a pip. So you can trade anywhere, and you don't have to be even either. It's not like you have to be the one, you have to be 100,000 units or 10,000 units or 1,000 units. You can be anywhere in between, right? You want to trade 50,000 units, that's half of a standard lot. So it'd be $5 a pip. Hey, Grayson, good to see you, bud. Okay. But that just gives you an idea. Now, come back to this. So if somebody is playing one standard lot and you get a 50 pip move, that's $500 in 30 minutes. You see why I say that these trades are so good and why you can really do well scalping? Okay, so a couple of the people I know, and I'm thinking about one guy in particular who is a professional Forex trader. That's what he does for a living. Okay, and he primarily scalps and day trades. All he's looking for is to get 2, 3, 4 trades like this a day, and he's done. Okay, his goal is about 100 pips a day. All right, 100 pips a day, and that may come through 2 trades, 1 trade, 4 trades, 5 trades, but that's just sort of his goal. Okay, make about $1,000 a day. Now he also does have some swings that he'll put into play. That's when you go to a higher time frame. Let me show you. So maybe you go to the daily. Okay. Okay, maybe you go to the daily and you try to catch something like this. Okay, that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. That's 12 days, so that's 2.5 trading sessions, 2.5 weeks in trading sessions. Okay, so he'll also take trades like this, and they're just set and forget, right? Like he might have a target way down here, right? Or maybe his target was just here. Okay, maybe his target was right there. So he just sets and forgets those trades. I show our traders how you do that. You use something called an OCO order, which stands for one cancels the other. And that way you can have both stops and sell targets. So let's just say you had an OCO and here's your sell target, and then you had a stop up here. As long as this stop doesn't get taken out, as price moves down and bounces, it does nothing, it does nothing. Then when it gets down here and it hits your sell order, it just sells it for you. So he takes trades like that as well, in combination with every day he's looking to try to make at least 100 pips. So about 500 pips a week. And now he plays a lot more than one lot. I was telling everybody he took a trade the other day and he made like 5,000, 5,300, something like that in like less than an hour. It was like a 40-minute trade, but I think he had 7 lots. He had 7 lots. But in less than an hour, he made like $5,300. So when he's trying to make 500 pips in a week, he's playing more than one lot. But if somebody was just playing one standard lot on average and they made 500 pips in a week, that's $5,000. It's 250 grand a year. Okay. So let's go back. We had the alert go off while I was talking on the market. Let me get back to our 30-minute. All right, so we got over this, and now look where we're at right now. Okay, we're trying to get over the 20. Okay, trying to get over the 20. And let me take a look here. Okay. That was Tastyworks, by the way. That's where I trade when I trade anything non-Forex related. Okay, so it's struggling a little bit, trying to get over there, and then its next obstacle is this wick right here. All right, so let's do this. I'm going to set an alert right up here at the top of this wick. That'll let us know if we get up there. You see this? Okay, I'm not trading this. You know, one of the members just asked a minute ago if I'd be interested in going long right there. Just a little bit choppy for me. Again, this may end up blasting up here. It very well could. I'm just looking at, you know, you saw what happened the first time it got here, right? And in this volatility, when it sold off, okay, back under here, if you were playing options, that'd crush you, right? That'd crush you. Now, if you were just playing a standard contract, you might be able to stomach that. But from here, 24.32, and it pulled back underneath here. So let's just say it was about right there. Okay, $16, even on a standard contract, right? Do you really want to stomach that pullback? Okay, I would, you know, if I'm trading something like this, I'd have really tight stops. And if I got stopped out and it came back up, you can always re-enter. You can always re-enter. Always have that in your mindset. There's nothing wrong, especially if you're trading like futures, Forex. There's no PDT rule. You can take as many trades per day as you want. Getting into that habit, or if you have a large enough account on the equities, you don't have to worry about the PDT rule. There's nothing wrong with just taking quick stop outs, and if price, you know, comes back. I know a lot of guys that, you know, they're totally not concerned with winning percentage. So let's say they got up here and price reversed and they had a real narrow, they get stopped out, comes back up, pokes its head above, they enter again, comes back, they get stopped out, and then finally the third time it makes the move. They could care less because they're going to make so much more on the move than it cost them on these small stop outs. Okay, so we're still here at the 20. You see, when you guys are watching this in real time, see why I call them obstacles? I mean, it may eventually get above it. Okay, but this was an obstacle, it pushed it down. So far, the 20 has been an obstacle. It keeps fluttering, fluttering. Right now, we're below it. Okay, looks like it wants to poke its head red, but I don't know if it will. We'll see. Okay, we just started a brand new candle. Typically, when a candle starts, whichever direction it starts first, which this one started to go green, it typically then reverses and goes the other direction. I don't know if you guys ever noticed that or not. Whichever way, like when I'm talking about the second it opens, the direction it goes for those first few seconds, it normally turns around and goes the other way, one way or the other. Maybe it's just me. I watch price action all day, every day, all night sometimes, and you just get used to it. You start to get the feel. So, you know, anybody who's new in here, maybe this is your first time. I trade price action, which is the candlesticks and the patterns of the candlesticks, supply and demand, which are these zones here, and then support and resistance, which I drew them on here again. I just rolled it into this new contract, which is ESMM. Okay, we were on ESH, and I had all my levels drawn in, but I drew some in here earlier, and then for some reason it like erased it, and I didn't do anything. So I might go back and draw some more here in a little bit. All right, so right now, and we're so early, we got 28 minutes to go on this candle. Right now, the 20 is acting as resistance. See that? That's why I call them obstacles. This wick, the 20, and this one. You get above here, you don't see really anything that would stop you until you got up into the supply zone. All right, let's look at Tesla. Let's look at Tesla. See what it's doing this morning. Oh, we just had an alert go off. We'll come back. Euro JPY. Euro JPY. Okay, Why did my alert go off? Can everybody see? Because we just got up to, we just touched a new supply zone. Okay, we just touched a new supply zone. Let me shrink this in just a little bit. Okay, over here is where it was created. And how was it created? Off of a rally, one candle base, and then strong drop away. Okay, and we just touched it. And we talked about this before, the textbooks, and when I say textbooks, I'm using that loosely. Supply and demand 101, supply and demand basics say that for your base, they like you to have, 3 to 6 candles generally. So like down here, you see this. Okay, and there's a reason this isn't a supply zone. You notice I don't have anything drawn in and price went right through it anyway. I can talk about that here in a second. But the reason I will go ahead and draw a zone in off of just one candle is because this is the 30-minute time frame. Okay, or if it was like, say, the 1 hour or even the 4 hour, but I trade mostly off the 30-minute, is because if you think about it, one 30-minute candle is 2 15-minute candles or 6 5-minute candles. All right, and look, we had a strong move up. Then this is our base, this is our resting candle, and then a strong move down. Okay, so that's why my alert went off. My alert is telling me look to go short. Look to go short. And if you come back over here, I leave them on here. Occasionally I wipe them off, after a while. Okay, I leave them on here because I want not only for me to be able to see, because I'll occasionally also see one didn't work, and then that'll make me go back and look. Was there a reason? Sometimes they just won't work because the momentum is so strong, it pushes right through. But most of the time, if a zone doesn't work, it's something I did. I didn't, there's some analysis somewhere that I missed. Okay, so let's just start right here. Okay, look. We came all the way down here, bounced in this zone, came all the way up here. That would have been a heck of a bounce, huh? Right? Then we came down over here. We created some demand. We created some demand. We came all the way back up, and there's our first touch. Everybody see that? There's our first touch. Was it a highly probable trade, a highly profitable trade? You betcha, because look what happened. Sold all the way down here. Actually, right here. Okay, so from 118,822 down to, wait a minute, am I looking at this wrong? Oh, 822. I'm sorry. 8 bottom. Yeah, 820, 830. Okay, 830. I'm sorry. 830. So that'd be 830, and the low was 307. So 83 minus 30, 53, right? Yep, 53 pip move right there. Okay, again, I'm a little foggy this morning and doing math in my head. I usually just use my calculator. Okay, but again, How many of those do you have to take to have a profitable day? Like 2, right? How many have we already looked at that were 50 plus? Right around 50. Okay, so there's 53 on the first test, right back down here. That easy. There's 53. You do 2 of those a day, there's 100 pips. You do 3 or 4 of them a day, it's like 200. I mean, now that's odd, or I shouldn't say odd. You're not always going to get that many in one day, but if you have enough charts marked, you see how I have my charts marked, and I have my alerts set. So you guys are watching this in real time. My alerts go off, and they tell me, like, so right here, I would have had an alert going off saying, look to go short. And what I typically do is I watch it go up, and if it immediately starts to come back down, as soon as it's clearing this, I'm in. And my stop is either up here or about halfway. Okay, and then once it moves, like say it moves about that far, I'm going to pull my stop down to where it's just barely profitable. And at that point, I don't have to worry. I don't have to worry. Even if price reverses against me, I'll make, 2, 3, 4, 5 pips. Those folks in my room, they know it happens to me all the time. It'll move away, like say to about here. I move my stop to where I'm barely profitable, and then it'll reverse on me, and it'll come back, and I'll just be in the room, and I'll be like, just got stopped out 6 pips. Just got stopped out 4 pips. Just got stopped out 7 pips. But they're to the green, right? They're to the green. Those are the best stop outs, right? Maybe price didn't go your way as far as you thought. Okay, like you could have exited, like say right here. Now this is not what happened. I'm giving you a theoretical situation. Let's just say it went right here and then reversed and came all the way back up, and I got stopped out for say 4 or 5 pip gain, right? I could have exited down here for 25 pips or something like that. But what I typically do is when you see this kind of an initial move away, wherever my stop is, I'll take it and move it just into profitability. And then I look for whatever my actual target is, which in this case probably would have been this zone or this support level right here. Probably would have been that. Okay, I don't know that I even would have took it all the way down here, although I might have, right? Because it broke through fairly easy, but then on the next one, it immediately started to reverse and go back up. Okay, so I'm just trying to give you some of my thinking. Okay, so then what did it do? When it went back higher, created this zone, then it came down. Okay, here's our first touch. Here's our first touch, and look how high it bounced. That happened on one candle. It touched, it bounced all the way up to the 200, so let's just see what it was. 118.44, 89, so just say 9. I'm trying to make the math easy in my head. 90 and 40. Again, 50 pips. 50 pip bounce on the first touch. Right there. I would have had an alert. Now, I can't take them all. Like I was telling everybody in the room last night, like I was trying to post, and I even made the comment, I'm like, you gotta be selective in terms of don't try to enter too many at once, because then you'll get distracted. And if you get distracted, you never want to trade when you're distracted. I personally think, this is just my opinion, you do anything you want. I personally think you should only be in 2 or 3 trades at a time. So there will be times that maybe I'm in 1 or 2 and alerts are just going off. Okay, you can't take them all, right? You can't take them all. I know somebody, and he's not in here. Some of you may know him, so I'm not, and I never talk about individual names anyway. But he used to be one of those guys that could be in 15 or 20 positions at once, and he used to kind of, almost brag about it, right? Yeah, in my 20 positions, I'm up in 14 of them, and I'm only down in 6, and this and that, and blah blah blah. Well, then all of a sudden he disappeared for a while. I reached out to him. I'm like, hey, man, haven't heard from you in a while. And he's like, yeah, I blew up my account. I'm like, how did you blow up your account? And he's like, I just had way too much going on. I couldn't keep up with everything. Had a couple of bad days in a row where things went against me and blew up my account. He's like, so now I got to take some time off and reevaluate. And I told him, I said, hey, let me give you a little bit of advice. Just try not to be in more than 2 or 3 positions at a time. Keep your position size small, and then you never have to be stressed. And so then when he came back, that's how he trades now. Okay, so initial test, 50 pip bounce. Okay, then we came over here. We worked our way up. Okay, we didn't get up here. Nothing to do, but on the way down, we created supply. Okay, so you mark it. Then we came down here. Again, here's your initial touch of this zone. And you guys see this? Look at how many times the first touch creates the best opportunities. Look at this one. Okay, first touch, and where does it go to? all the way up here. Now I told you, this is the ideal situation. This is the ideal situation. You go from zone to zone with no significant pullbacks. You see this? All right, so let's look at it. This was 117,407. 117,407, and the bottom up here, 118,478. 171 pip move, zone to zone. Those are those are like the ideal situations. So you see why it was important to mark this on the way down, right? Why do you mark them ahead of time? Because that's going to be your exit. You're getting out when you get up here. Because we already know it's highly likely on this first touch that what's it going to do? It's going to turn around and reverse. All right, so we get this first touch. We just calculated it from the top of this to the bottom of this was 171 pips. 171 pips. Okay, so then what did we do? First touch, we sold off down to here. Okay, let's just look. We're going through. I'm just trying to show you guys. Okay, 118,482. In the low, 118,104. 482. So 38 pips. That's awesome, right? 38 pips. Okay, so there's 38. Then it chopped around. Then it went up. Here's our first test up here. I did take trades on this. Okay, I did take these. All right, so here's your first test. Then it sold off all the way down to here before it reversed. I'm just telling you, my target would have been here and the 20. Those are my targets. Okay, but look, first test, it came as low as this. More than likely, you're not going to stay in all the way down there because see these chops where they came down and bounced, came down and bounced. Typically, that's going to get most people to get out. Not everybody, all right? So then it continued on. It almost got back down here, but it didn't. Because it didn't touch it, this is still fresh. We'll extend this over. And then it caught some support here, and it's bounced all the way up here, and this is the alert that just went off. This is the alert that just went off. Okay, now if somebody wants to look at a trade, I would wait until price leaves this area, okay, and then your stop would probably start up here, or at worst right in here. Okay, if you want to like reduce some of your risk, most professional Forex traders are always putting their stop just a penny or two outside of the zone because they know it's highly unlikely the zone's going to break. You know, even if it pierces up into here. Like right now, are we halfway? We're almost halfway up into the zone. Okay, but you can see this topping tail over here, this wick that helped create this. This is where the most aggressive sellers probably are, is right up in there. Okay, but if you're looking to take the trade, you would be looking for it to leave this area, head back down. Okay, this could be a target. The bottom of this wick could be a target for a scalp. So let's just do some quick math. 119,088. And this is 875. All right, so 13 and 8, that's 23 pips to here. And then down to this wick, 70. And what do we say this was? 088. So 8 and 30, and then it'd be about 38 pips down to this wick right here. Or if price started to just fall, you can trail it. I do that too. You know, once price, like say it gets here and moves on past, then I'll put a 10 or 12 pip trailing stop in case you get some big move down like that. Okay? If you get some big move down like that, you just trail it on down. All right? Okay, anybody have any questions about that? I know there's at least one person in here who had asked me before the YouTube live stream if I would talk quite a bit about Forex today and kind of how I trade it and what to look for. So that's why I'm spending so much time just kind of going over, how you draw the zones, why you draw them, why you set your alerts. Like I was saying down here, I need to extend this over. So this zone here needs to be extended because we haven't hit it yet. So I got to pull it on over here. That'll be good enough for now. I can always extend it later. All right, let's go back and let's see what the market is doing. We got plenty of time left if anybody has questions about anything. All right, so here's the market. Never did make it over the 20. Okay. Now we're back below opening price level. So whoever it was that asked me, it was you, Al. Al, you were asking me, would I look to take this? That's why I said no, right? That's why I said there's too many obstacles for me. Somebody else may have took it and just tried to make this little part right here, from right there. So let's just say 24.32, and they probably would have sold as it started to pull back $7. Somebody could have maybe tried to take it for $5, $6, $7. For me in this volatility, I'm just saying for me, that's not worth it. The premiums are jacked, right? Premiums are through the roof. Volatility is high. And what if you get caught on the wrong end of this? No fun, right? Whatever you just had at risk, if you couldn't get stopped out or you didn't put your stop. I know like Thinkorswim, every platform is a little bit different. Thinkorswim won't let you put a mechanical stop in on ES. So all you can do is set an alert and then you manually have to stop yourself out. So look what happens. You get up here and even if, let's just say your stop was somewhere in between, it can only be an alert on Thinkorswim. Now, I don't trade Thinkorswim anymore. Like I'm just saying people who are, this is the scary part, right? All of a sudden price just starts to flush on you. And you have no mechanical stop. All you can do is manually try to get yourself out. Well, now as it's falling like it's been falling, it's next to impossible to get yourself out until price starts to stop. Thank you, Al. Again, I'm just making decisions based on what I think is most probable. That's all we deal with in trading. If you start to, Mark Douglas talked about it in Trading in the Zone. You're trading probabilities. That's all you're doing, right? And you must accept the fact that any individual trade can go against you. But if you have the proper system and you have good analysis over time, over 10 trades, 25 trades, 50 trades, 100 trades, you should be winning more than you're losing, whether that's through winning percentage or through risk to reward, or reward to risk is really the right way to say it. If your reward to risk is in a proper ratio, okay, your winning percentage isn't even that important. It's important. I still want to win more than I lose, but like I told you guys on one of the last sessions, one of the professional Forex traders that I know, he doesn't even worry about his winning percentage. The only thing he worries about is profit. So at the end of a week, how much money did he put into his account in terms of profit? And he could care less if his winning percentage was 30%, 40%. If he made $5,000, $10,000, $15,000 that week, he doesn't care, because he knows when he's playing out of these zones, okay? When he's playing out of these zones, he knows that his profit, his reward is always much greater than his risk. So if he gets stopped out 3 or 4 times in a row and then he catches this, he's way ahead of the game. All right? Look how it's selling off. Look at this. See how it's selling off? So always, you know, my wife, one of her phrases is count the costs. Always count the costs. Know what you're getting into ahead of time. So for me, this upside, it just wasn't that attractive. Obstacle, obstacle, obstacle. Okay? So for me, counting the cost, and then you add in premiums are through the roof, volatility is extremely high. You put all those together, to me, it just wasn't a high probability opportunity. Okay, so we're watching it. We're going to see what's going to happen. Okay, last time it caught some support in here, which this is the no longer fresh demand zone. If I extended it across, you could say it's a used demand zone now, but you don't want to put reliability into a used demand or supply zone. The highly probable trades are on these first touches. Okay, you want to catch that move there. That's highly probable. Okay, and then when it came back through the next time, it came all the way down here before it bounced back up. Okay, you didn't want to get here and it touched and go long, and then you have that go against you. You see why I cut it off? And right now we're going right on through it. We're going right on through it. You're welcome, Al. And that's all it is experience. I'm just an average guy. You don't see me out there, you know, on Twitter pounding my chest that, you know, hey, I've got this proprietary this, or I've got this super duper trading system that's going to make you $1 million. You know, that's not me. I'm just like you guys. I'm just an average guy, and it's just experience. That's all it is. I've just got a lot of experience. And like I said, I just spend hours upon hours upon hours looking at price action, creating supply and demand zones, marking my support and resistance lines, which should be on here, but you guys were on here earlier. I put them on there and they disappeared. I don't know why. And then I just trade that. And I use common sense. Some of the best advice that was ever given to me is use common sense when you trade. Don't rely on, some people use the word hopium, right? Don't trade on hopium. Well, I hope price goes up, or I hope price goes down, or, you know, I'm hoping that price does this. You can't trade that way. You cannot make money trading that way. The only way you can make money is by putting the probabilities in your favor and trading them repeatedly the same way. Okay, and that's another thing. I see so many people out there, and I hope if you're in this boat in this live stream, or if you're in my community and you're in this boat, I'm talking to you. I see so many people that every 2 weeks, every month and a half, they're changing strategies. Well, this isn't working, I'm going to this. Well, this isn't working, I'm going to that. Well, this isn't working, I'm going to this. What's the only constant in all of that? You. You're the only constant, right? I'm telling you right now, and again, I believe it even references this in Trading in the Zone. You can make money with a bad strategy if you have proper trading psychology and a set of rules. That's pretty much it. That's pretty much it. They've done studies before where they take trades based on no strategy whatsoever. None. No strategy, and they flip a coin for every trade. No strategy. They just flip a coin. If it's heads, we're going to go long. If it's tails, we're going to go short. And then they have a set of rules that they apply. And you know what? They make money every single time. With no strategy. They're just following the rules and using proper psychology. Okay, so let's say a new candle opens up, right? Like right here. Let's just say that was a brand new candle up there. In the study, what they would do is they just flip a coin on the open of that candle. If it was heads, they would go long. If it was tails, they would go short. So let's say that they flipped and it was heads, right? Well, their rules are going to say, I'm going to place a stop here, and I'm going to take profit here, whatever that is, whatever their rules are, and they don't care what else happens. So when price started to go down, they would have stopped out, and they're out. That's it. Next candle starts, they flip a coin, they do it all over again. And when they do it, I think in the study, I think they did it 100 times and then 1,000 times, like 100 trades, 1,000 trades, and maybe they even did 10,000 trades. I can't remember. They make money every single time. Every single time with no strategy, just rules. Rules and psychology. Okay, so right now, we got down here, okay, we're in this wick, right? That wick tells us that that's where buyers were earlier. Okay, so we got down into this wick, and now we're sort of bouncing back up. All right, let's look at some other things. Let's go back and let's look here. Okay, still not much going on. Our alert went off. Oh, actually, I take that back. We already looked at this. Yeah, we got our move down here. We got our move down here. So from here to here, that was our move. Okay, now price is starting to go back up. That's why you look to, at least I do, I look to just scalp these moves out of here unless it breaks and goes below. We already looked at that. I'm sorry. Let's go back to Tesla. Okay, here's Tesla today. Gapped up slightly. It's leaving this zone. Okay, now if I scroll in, I want to show you what originally happened. Okay, here was the first test, right here. Never got outside of the zone, and then it sold off. Back down to where? Back down to the 20, right? So it actually made it through this level, which is 405.26. And it made it down to the 20, and that's where it caught support. So here was the initial test, right? Then it starts to reverse, and let's just see how far it reversed. 434.84 down to 391.76, 84 to 91, not quite $100, but almost $100 reversal out of supply. Now, you wouldn't have taken all of that. Okay, when it started heading back down, you probably would have got in maybe somewhere here, or if you're like me, conservative, you would have waited for the bottom of the zone. That's where I would have looked. Okay, bottom of the zone, 417.59, and then down to the 20 here. Let's even be conservative. The low was 391, so let's say you got out at 395. 5 and 17 is 23. $23 move on Tesla is going to pay you quite a bit of money, right? Okay, so zone holds, you get the bounce down. Now, and I wasn't on here, at that point, it's no longer fresh. Okay, showing you guys what to do. This is an equity. You trade equity just like you would trade Forex, just like you would trade futures. Okay, so now I would bring this back over here. I'd probably bring it to about right there. Okay, now I can scroll back in. All right, so here was our initial test. Never made it all the way through, and it did sell off. This was a likely area to catch a bounce. Okay, and now as it moves back up through, do we expect it to stop again? No. We've already had our initial test. Can it stop again? It can. But once it's been tested, it gets weaker every time. It's not uncommon for it to catch a second bounce. It's rare that you'll catch a third. Okay, we had that happen, I think it was earlier this week on one name where it caught three times in the same zone. And then the fourth time, it absolutely flushed. It just absolutely flushed the fourth time. That's rare. Typically, this is how it plays out. This is why you just go ahead and cut it off. We got our bounce down, and then the next time through, we went right through it, pulled back a little bit, and we've went higher. Okay, this is Tesla. And so far, this 476.75 resistance level has been acting as resistance. You can see we went right up to it and it sold back off. All right, let's look at Walmart since we're down here. Okay, here's Walmart. Okay, Walmart actually opened flat, went up to the 20, big spike up, pushed back down, and it's been selling off, and right now it's at the 200. Okay, so let's just see here. 119. So it's down over $4. It's down over $4. That's a big move for Walmart. Somebody's making some money there. Advancers are high, 2100s. We know why they're high, right? Okay, because the market gapped up from yesterday's close, right? We had some positive action overnight, and those people in the premium room in the simpletradinglife.com community, they know I posted several names that were downgraded this morning, and yet they even gapped up. They gapped up even though they had negative news because the market drug them up. Let's go look at a couple of them. I know Nike was one of them. Let's just see what they did after the market opened. Okay, I don't trade Nike much. That's why you don't see levels on here. I can draw them in just to show. So here's Nike. There's where it closed yesterday. Gapped up, went up, pushed back down, and now it's going up and back down. So it's kind of choppy today, but it had a downgrade. It received a downgrade today. Let's draw the lines in just so people get used to seeing it. I do this every session. If it's a name that I don't normally trade, I draw the lines in so everybody gets used to seeing how it's done. Okay, 4-hour chart, switch it to a line chart. Start with most current price. Make sure you have your price line tool. And then you start drawing them in. Okay, big moves, sharp pivots. Most recent price action is your most critical. You don't have to be exact. You want to avoid most of the small stuff. Why? Why do we avoid the small stuff? Because if you don't, you'll drive yourself nuts, right? Even on a 30-minute, you'll drive yourself nuts because it's going to make these bigger moves, okay? So here, even though it has these smaller moves in there, it still moved from here to here, right? Okay, so you don't want to drive yourself nuts on all of this. So your bigger moves and your sharp pivots. So I would ignore all of this and come up here. 105.15. Now let's see, do we have anything lower than, I have to go to a higher time frame, lower than 62.60. I got to go to the daily because it'll go back further. Do we have anything lower than 62.60? Yes, we do. So I can draw a few more lower lines in, which we're probably, if you trade Nike, you're probably going to need these lower lines coming up. They just had a downgrade. Obviously, you know that other than a few stores in China that they reopened, they've closed all their stores in North America. And we have a Nike store not too far from us. Okay, you see where I'm drawing these lines in? See if it goes any lower. I'm sure it will. Okay, yep. I would draw this one only because it got touched twice there. See if we go lower. Scroll back. Yep, there we go. We're going to go lower. Okay, this one here. Okay, why do I draw it here and not here? Because this was more recent, even though it's way back in the past. I'm ignoring all this choppy stuff, right? Ignoring all of this choppy stuff. And we're going to come down to here. I'll draw just a couple more, and then we'll go back and we'll turn the candles back on. And let me just draw these ones. Okay, turn the candles back on. And we'll go back to the 30-minute. Grayson, I will go take a look at that here very shortly. He's asking for USD JPY. So let me just finish right here on Nike, and then we're going to go take a look at that. Okay, so now we've got our levels in. You can see how they've been respected. You guys have been here before. You know, if you want to add a level, if you see something on the chart, I like this right here. Okay, so I'm going to add this in. Why did I add that in? It's because price has been up to it twice and rejected off of it. And we have a gap here. Okay, so that's a level that I want to know about. So that's how you adjust or tweak your levels. All right, so that's Nike. Let's go USD JPY for Grayson. Okay. So Grayson, we were talking about this a little bit earlier. You know, Grayson is also has a full-time job, so I know he's in and out, in and out. He is our behind-the-scenes guru in the Simple Trading Life community. He handles all of our tech. He designed and built our website. He does a lot of the creative stuff, the videos that you see on our YouTube channel. Grayson has done all of those, so we are very grateful for him. Okay, so here we are. We're still up in this supply. Here was our initial test. And Grayson, if you weren't here, we talked about it. We did get this bounce down here. So we already looked at this once. 111 down to here. So that was a 50 pip bounce off the initial touch right there. If somebody would have took that, that was 50 pips. Now we're back up in. We'll see, does it reject again? Okay. Now, if this is only a hypothetical, I'm not going to take it. But if somebody was going to take it, if they're looking for the second bounce out of here, I wouldn't be looking to enter unless you take out the bottom of this. Okay, then you could maybe look to enter and put your stop just above here, right? Keep your stop relatively small. So if you took out the bottom of this, which is 110.88, is where you'd look to enter. It's at 110.89, so you'd look to enter at 110.88, and then maybe have this as a target. If you can clear these wicks, right? If you could clear these wicks, then you could have this as a target down here. All right, so just something to look at. But as you can see, right now it's still trying to push up in here. Yep. Grayson, that's kind of what I figured. I even came back to it once and I forgot I'd already talked about it. So this is like the third time we've talked about it, which is perfectly fine. So there was the initial touch and bounce that was good for 50 pips. And then over here, I wouldn't look to go short again unless we cleared the bottom of this and then would look to head down. Okay, let's go back and look at the market. Thinkorswim is kind of lagging this morning. Nothing new. All right, so there was that sell-off from the 20. Okay, back down into used demand. Really where we're catching the support is from this wick. This wick is what's giving this support. Okay, and what does this wick represent? It represents very aggressive buyers. Okay. Now we've got, let's see here, we're only about 12 minutes into this candle, so we got about 18 minutes on this candle. If this candle hypothetically would close just the way it is now, that would be a bearish signal. Doesn't mean you do anything, right? But if it ended as a spinning top, it's starting to push its way back up now. If it ended as a spinning top, that would be a resting candle. Wide ranging red candle, and if we ended as a spinning top or a doji in the lower 25% of this candle, that's a bearish signal typically. Then on the following candle, or it could be the next candle, because you can have two resting candles, never more than two. Okay, your probabilities are gone if it's more than two. If it's one resting candle and your next candle starts, doesn't even matter if it starts and goes this way a little bit, but then comes down and takes the bottom of that candle out, it is highly probable that you're going to go red and going to have a move similar in magnitude as this. Similar. Okay? Don't get hung up on saying, oh, okay, well, I know from here to here, that's this, and that's exactly what I'm going to have down here. Nope. Could be shorter, could be the same, could be a little bit longer, but similar in magnitude typically. Typically. So if it ended right the way it is now, that's what you'd be looking for. Even if it started to go up first and then came down, you'd look to enter right below here, and then you would have your targets. For me, because I'm conservative, you might have your first target as the bottom of this wick. Maybe your second target is the trend line. And then maybe, I would be concerned over here as well, right? Okay, we know that was a turning point. Okay, we know that was a turning point, but then we have this big wick over here. That's why price turned where it did. You see that? There's no demand here per se, like a traditional demand zone. Price turned because of this huge wick. Super aggressive buyers. That's what created. Remember, what was this candle at one time? It was a huge red candle bigger than that. At one time, this whole thing was a red candle. And then buyers came in and pushed it all the way back up here, created a hammer, and then we went higher. And that is a highly probable trade. You take out there and you put in a target. Maybe your first target is here, or maybe it's the trend line. Mine would probably be right there, would be my first target. And then you'd have to go back to the left. Okay, your second target would maybe be like right there, would be your second target, the bottom of this. Okay, you see how I figure these things out, how I look for things, how I come up with targets, why I know price is likely to do something. Price is very likely, and it did, it was very likely to turn when it got into this huge wick. Okay, it has nothing to do with a traditional demand zone. It's just because of this. All right, and what did it do? It not only turned, it blasted to the upside. That created our supply. We came back down into demand. We got our bounce. Came down, came back up. We could not get over the 20, and so far we've been selling off. This candle is starting to go red. Okay, so let's just talk a little bit more theory here, analysis. If this candle takes out the bottom of this wick, you're then looking to see, can it get below here? If it can get below there, then here's a target. If it can get below there, then you're back into this wick. Okay, you're back into this wick, and then that would be your next level to the downside. That's could be a long ways away, right? But I'm just showing you what has to occur. You have to get here, then you have to take this out, right? Now this is more a psychological level, but you can see how often it's respected. Look at this. 1, 2, 3, 4, 5 candles in a row respected the trend line. Then it finally broke through. Okay, so you could come down here and start doing this. And then maybe eventually break through. Okay? All right. Okay, guys. We're at 11:47. Typically, we try to end around 11:45 to noon. Does anybody have any questions for me? I'll wait just a couple of minutes, see if anybody has any questions. In the meantime, anybody, if you're new or you haven't subscribed, please give us thumbs up, subscribe to the channel, and turn on the notifications bell. And check us out at simpletradinglife.com. You'll find all kinds of information about us. You can either join our free chat room or our premium room. Our premium room just launched a couple weeks ago, and I know there's several of the members who are in here right now. I know they love it. And we do live streams like this privately for them on Mondays, Wednesdays, and Thursdays. So it's just me and them, and we get a little bit more in depth on some of this stuff and pointing out trade ideas, teaching things, little tips and tricks, things like that. So if you'd like to, feel free to join our premium room. It's very, very inexpensive. It's only $97 a month. We try to make it as low as we can. And we also do have a 3-month deal. If somebody signs up for 3 months at a time, they get $10 off per month. So it saves them $30 on every 3 months. I'm just waiting just a minute or two, see if anybody has any questions. And if you don't, then we'll wrap this one up for today. We'll be back on YouTube on the free Tuesday and Friday one next Tuesday at 9:45 a.m. Eastern Standard Time. And again, feel free to join us in the simpletradinglife.com community. We're in there every single day. I even post stuff over the weekends. And we watch the market all day long. We watch the news all day long. And especially in the premium room, we're going over potential trades. I have lessons. So there's free lessons in the free chat room, and then there's premium lessons in the premium room. So there's all kinds of stuff like that as well. Okay, I don't see anything from anybody. We're going to go ahead and wrap this up. Again, thank you so much for joining us. We'll see you next week.